Now, very good morning. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we'll take all your stock-specific queries with our experts. But before that, a quick look at the markets. Ankita, we are holding on to gains despite that mixed handover that we got, from the on the back of global cues. But Nifty Bank, that's the one that is still in the red.
Absolutely, Kanishka. We do have a negative global handover that's coming in. But, as far as Nifty is concerned, it is managing to hold out in the green, but we are very, very range bound. Now, remember, we have been trading in a range for a while now, and we are maintaining that position as of now. We are in the green. Well, 24,644 is where we are perched at on the Nifty, 78-point gains coming in. As far as Nifty Bank is concerned, though, that has slipped into the red. That's trading with cuts of almost 0.1%. So Nifty Bank is at the lowest point of the day right now. And if you look at the broader market, then if you pull up mid cap and small cap, that's outperforming the benchmark indices. Mid cap is trading with gains of 0.4%. We also have small caps that are doing well. That is up 0.2% right now. It has moderated a bit, but the broader market is doing well. India VIX, if you look at India VIX has shot up almost 3% right now. 12.31 is where India VIX is at. So the volatility is intact. We are going through a volatile session. Advance decline ratio today is tilted in the favor of advances. Now remember, this has been the drift of the market for a while, that only the stocks that are moving on the back of either news flow or on the back of results. So that's where the action is really coming from. But as far as the frontline index is concerned, they remain very, very range bound. So speaking of the stock specific moves that are coming in, we have delivery that has hit a 52-week high today. That was up in 5% on the back of good quarterly results coming in. Bullish brokerage notes there. It's up in a way 6.2 right now. We also have UPL that was up 5% on the back of positive brokerage notes that came in for it. We also have stocks buzzing on the back of order wins like Titagar Rail, Railtel Corp, that is buzzing on the back of order wins, 2% up for both the counters. We have a couple of other names that are not doing so well, like Symphony, that is down 3%. We also have Advanced Enzyme, that is down 8% on the back of Q1 results. We also have Hero Moto, that's trading at the top Nifty gainer with gains of 3.2%. That's the top Nifty gainer on the back of it's a monthly auto sales number that have come out. So Hero Motor is trading as a top Nifty gainer. So largely, Kanishka, another day where, it's the stock specific moves that are really taking center stage.
That's right. Stock specific moves is what is taking center stage, especially earnings driven. But to take the discussion forward, we are now joined by Gaurang Shah, the Senior Vice President at Geojit Investments, and Kunal Shah, the Senior Technical and Derivatives Analyst at Mirae Asset Sharekhan. So, before getting to all the stock specific queries that our viewers have sent, Gaurang sir, let me come to you. What are you making of the markets at this point? Do you think we are going to be able to, shrug off the global negative handover that we have gotten, given the tariff uncertainty that continues to be there?
Thank you so much for having me on the show. Good morning to all the viewers of ET Now and to all of y'all. Well, firstly, a small disclosure, since we are going into stock specific recommendations. All recommendations that I'll be sharing this morning with y'all are a part of our research team. Our company Geojit or I, we do not have any investment interest, nor do we have any financial interest, nor there is any kind of conflict of interest, but we give recommendation on similar lines to our clients. They might have their investment interest. To answer your question, I think it is good to see that we are able to keep ourselves afloat this Monday morning, though the morning gains were a little bit higher than what we are witnessing right now. Tariff related news flows, I think slowly and steadily is getting digested by the market. And large part of what we want to know is already there out there. Now it remains to be seen what are the discussions between the two counterparts, that is Indian government counterpart and the American Trump related representatives, and how do we come to a common point of understanding and getting it signed, sealed and delivered. On the markets, domestic front, I think the first half of this earnings season has been a little bit disappointing. Expect whatever remains of the second half to give a little bit of support to the market. There might be a little bit of stability coming in. So according to me, I think it is more important to see some stability in the market rather than, a run up and a sell off and then a run down. Stock specific, earnings related news flows will definitely be there. What we've shared with our clients is that if we are able to keep 24,500 intact on closing basis, then I think the upward move still remains. If we give a close below 24,500, then the downside gap opens up a little bit more. So expect stability rather than any kind of run up or run down.
You see stability in the market, so basically we are holding up decently, and this should prevail, and probably the second half of the earnings should provide some bit of a respite perhaps, going ahead. But let's get started with all the stock specific questions then. The number is flashing on top of your screens. Please start writing in your questions, the buying price, your holding period, your question, and we'll get them answered by the experts, Gaurang and Kunal, who have joined us. So let's get started with all the questions, and the first question for the day, it's coming from Praveen from Bangalore. He's saying that he is planning to buy 50 shares of ONGC and Coal India for a long term. What is your view on this, Gaurang? ONGC and Coal India, what would be your long-term view for this?
Well, so both these stocks have been on our research recommendation list for a pretty long period of time. I hope that while deciding these two investment ideas, the viewer has kept a longish time horizon, 12 months, 18 months, 24 months plus. On Coal India, again, as I mentioned, there is a positive coverage for a pretty long period of time. Our sense is that the output of coal is improving over a longer period of time, and quality of coal is also improving. We have a hold stroke you can buy on this kind of recommendation on Coal India. On ONGC, the government's focus has been there that India should bring down its reliability on imports of energy, that is crude oil and natural gas, to a great extent. Mr. Puri, the minister, has also been vocal enough about exploring the in-house natural resources on land, offshore and ultra-deep waters. On ONGC, we have a buy recommendation from a long-term point of view. My only request will be that start at current levels. Don't try to go and look out for timing, valuation, finding the right level. At least take a step forward in both these investments with a small portion, and on dips you can add into it.
All right, so that's the view on Coal India and ONGC. But Kunal, now let me come to you. We have a query from the defense pack. So this viewer, Sai Babu from Vijayawada, has written to us. He wants to know your view on BEL. He has 240 shares at a price of 298 rupees. He wants to know whether he can book profits at this juncture, and if not, what is the level at which he should book profits? He's a medium-term investor.
I think overall, if you look at the defense space, they have seen a decent amount of correction from the higher levels. And BEL, if you look at the correction, what we have seen from the levels of 435 to this level of 380. So again, you might have a pullback from the current levels, and that would be an opportunity where he can at least sell 50% of his, he can book his profit. So currently it's trading at around 385. So say somewhere around 395, 400, that would be a good level to book profit. And the support for the stock on the downside is 375. Once that is breached on the downside, you can expect further correction towards 350, 340 on the lower end. So my suggestion to him will be any pullback what you get towards 395, book 50% of your profit, hold the rest of your trade on the long side.
All right, so those are the levels to keep a watch on as far as BEL is concerned. Coming to the next question then, coming to you, Gaurang, this is Ajit who's writing in from Bhubaneswar. He says that he wants to build a retirement corpus. He has 5 lakh rupees. He wants to invest. Kindly advise on stocks that I can invest in. Gaurang, this is a retirement corpus, 5 lakh rupees. So it has to be, perhaps he's looking for safer bets to invest in amid a market like this. What would be your picks?
In the stock market, there is no safer bet. Maybe, all indices tend to correct. Some may correct more, some may correct less, depending upon the nature of the performance. Since this is a retirement corpus which this gentleman wants to invest, let me give a word of advice and a caution that all investments in stock market is exposed to all kind of risks, whether it is locally or globally. Investment in stock market is all about high risk, high return. So you need to be prepared about the high risk appetite that you need to have. And there is no surety or guarantee about principal or return on principal. So with this kind of a caveat, if he's still willing to invest in stock market, I'll give 5 high quality names in different sectors, which you can allocate possibly 1 lakh rupees each. So Reliance Industries from the diversified segment, L&T from cap goods engineering space. In the private sector banks, HDFC Bank. In the cement universe, I think Ultratech is likely to do well. And in the FMCG segment, I think stock like Tata Consumer Products will do well. But long-term time horizon, I believe he's talking about 12 months, 18 months, 24 months period plus. Divide your 5 lakhs into 5 parts, 1 lakh rupee each. Start with some kind of investment at these levels, and on corrections you can add to the stocks.
Okay, so those are the stocks that you could look at adding. But Gaurang sir, another question coming for you. This is Rajkumar writing from Kochi. He wants to know your view on Jio Finance and HUL at at the current levels. Should he consider buying at the current levels for the long term?
Well, so Jio Finance, I think there are approvals coming in terms of initiating their services in the diversified financial sector that they want to have. So we have a buy recommendation on Jio Finance from a long-term point of view, and this one has been actually one of the stock which has been able to keep itself above the water in the last 10 days of sell-off that we've seen, thanks to the sell-off from the FIs and a little bit of disappointment as far as the first half of first quarter earnings this new financial year. So Jio Finance, we have a buy recommendation. The second question was on Hindustan Unilever. Well, this particular stock has been on our buy coverage for a pretty long period of time. Our sense is that the consumption-related green shoots will be visible in October, November, December. That is third quarter this financial year. Keeping in mind the tax concession that was given by the Honorable Finance Minister, good monsoon, crude oil prices heading lower with the news flow of OPEC Plus increasing the output, and of course the input cost coming down. So summing up all these triggers, you could definitely have a buy on Hindustan Unilever. Both HUL as well as Jio are a buy recommendations from our research team. I'll again repeat, start at current levels, and on dip you can add on.
All right, with that, it's time for us to take a short break. Don't go anywhere. After the break, we'll keep getting your questions answered on the other side of the break. So stay tuned.
The next query is coming from the IT pack. This viewer, Anand, has been holding TCS shares at an average price of 3,500 over a period of 3 years. Kunal, now coming to you, this viewer wants to know whether he should expect a turnaround. So can he continue to holding these shares, or should he exit at the current levels?
Yeah, I think if you look at the IT space, it has witnessed a sharp correction. Now, at the current levels, I would not recommend him to sell TCS. TCS, again, if the market stabilizes around this mark of 24,500, can witness a decent pullback on the higher end. So I think 3,300, 3,400 is where the pullback would play in for TCS, even from the current levels. Overall, the larger term trend has been on the downside for TCS, but utilize pullback at least to exit. If he has a long-term view, say for example 5 to 6 years, then probably a long-term bet you can continue to hold TCS. There is absolutely no problem. But if he has a short-term view, then bounces should be utilized as an exit opportunity.
All right, so that's TCS on the charts. Moving on to the next question. This is Prasad. He's writing in from Hyderabad. He says he holds 300 shares of United Spirits that he's bought at a buying price of 1,488 rupees. He wants to know if he can hold it for the next 1 year, or should he be switching to any other name? Gaurang, let me come to you for this one. United Spirits for the next 1 year, or do you think there could be another stock that could perhaps give him better returns? Because United Spirits hasn't really done much, in the last 6 odd months. There haven't been any moves coming in. But what do you feel about United Spirits?
Well, so the move was restricted more because of the government policies at the center and at state level, price revision, etc., etc. If you look at the consumption-related theme, then there is robust consumption. as far as the products made by either United Beverages or United Spirits is concerned. You need to be patient with this particular sector because of the volatility nature of the policies that unfolds. My request is that instead of 1 year, extend the time horizon to maybe about 18 to 24 months. That is 1.5 to 2 years plus kind of time horizon. As a disclosure, our research team has a buy coverage on United Spirits. So hold on to it and give it a little bit more time.
Okay, so that's the view on United Spirits. But Gaurang sir, another question coming for you. This is from the IT pack. This one is on persistent systems. The viewer K. Narasimha Reddy is writing from Hyderabad. He wants to know whether it's a good long-term bet or not. He has 30 shares at a price of 5,289 rupees. So should he continue to hold for the long term? And he also wants to know your overall view on the IT sector.
Well, so the view from the research team remains positive, but there are, the immediate headwinds for the IT sector. As we all know, Indian IT companies are dependent on US-related flows in terms of order book. What is happening in US, I think we all will have a lot of clarity in the next 3 to 6 months, whether US is going into a slowdown or whether there is a recession or whether corporates are going to cut their budgetary spends or discretionary spends on the IT-related products and platforms which they outsource from the Indian counterparts. So there is headwinds in terms of 3 to 6 months. On the sector, there is a positive view. Unfortunately, on persistent systems, we used to have a coverage some time back. We have dropped the coverage because I think our targets were in place. But we remain positive on the entire IT universe, whether it is large cap, mid cap, or small cap. We have other recommendations like Coforge, LTI Mindtree, L&T Technologies, Science Limited. These are the KPIT Technologies. These are some of the companies in the IT universe, along with large cap names that we are positive. Won't give any specific recommendations on persistence since the coverage has been dropped.
All right, no specific recommendation coming in on persistent system, but let's move on to the next question then. This next question is, Kunal, let me come to you for this one. Now, this person is saying that they hold shares for Hero MotoCorp. Now they have bought it at a buying price of around 6,000. So clearly they're sitting at a huge loss. They want to know if it will anytime soon come to the buying price. There is no name here, but Hero MotoCorp, just today we've got some numbers come out for auto sales that seem to be doing well, and the stock is up in a way 3.5%. But 6,000 levels anytime soon that this can reach 6,000, or what should this person do with the counter now?
See, if you look at Hero Moto, I don't think in the near term, I don't see the stock going to the buy price of 6,000, 6,200. But overall, the setup has been good for the stock, where we feel that the entire correction has been over, and we expect at least a strong recovery in the stock. This could go towards, in the short term basis, 5,000, 5,200 levels on the upside. Difficult to say. 6,000, 6,200 doesn't look on the chart. But from the current levels, we expect at least 5,000, 5,200 could be achieved in the next couple of months.
Okay, so that's the view on Hero Moto. But moving on, Kunal, another question coming for you. This viewer, Saindranath from Hyderabad, has written to us about CAMS. He has 25 shares at a price of 4,250 rupees. He wants to know whether he should average or book the loss at current levels.
Book losses. The capital market theme also in this correction has been hammered from the higher levels. Overall, the stock structure is still positive. It is trading in a sideways to a bullish trend, and I feel that there could be a strong pullback that could be coming in towards 4,000, 4,100. The buy price at which he has bought, that is the very strong resistance for the stock, and it needs to surpass that mark decisively to again lead to a new trend on the upside. So I think if he's holding long, continue to hold long. If the stock on the downside breaches the mark of 3,500, which has been the strong support zone for the stock, where we have seen multiple times the stock has bounced back. And if that is breached, then the correction could get deeper on the downside. So my suggestion is continue to be on the long side, keep a strict stop loss of 3,500 on a closing basis. If that is triggered, then exit your longs.
Right, on that note, Kunal, thank you so much for taking the time out and joining us. We'll come back to you, Gaurang, so you hang in there. But let me go to my colleague Sharad, who's standing by to get us the details for why UPL is soaring away in trade. That's trading up and away, almost 6.5% in trade. A bullish brokerage calls coming in for UPL. It's trading with high volumes. Sharad, take us through the lowdown of what the brokerage notes have to say and powering this rally in UPL.
Agrochemical major UPL came out with its numbers, but a strong rally coming in the day's trade, and this is because the company has not changed its guidance for FY26, be it the EBITDA numbers or the revenue numbers. Now, of course, the con call and the guidance has been very positive, and they expect a better recovery to happen in the second half of fiscal year 26. Brokers are expecting that the worst of the inventory and the pricing pressure is behind, and interestingly, there has been an improvement in the balance sheet as well, as the net debt to EBITDA levels that has actually come down from 5.4x to almost 2.6x on a year-on-year basis. That means the balance sheet numbers are improving. Now the company will also receive a $200 million payout coming from the rights issue towards the end of September as well. Brokerages have largely remained neutral or given thumbs up. MOSL maintained neutral, target price at 700 rupees per share. Antique has maintained buy but hiked the target price to 730 from 710. And Nuvama has also maintained buy rating at the target price of 808 rupees per share. Let's look at the valuations for UPL. The 5-year average PE that stands at roughly 14 times, and currently on the higher side is the 12-month forward PE trading at 18 times. But net in a challenging environment, the company has performed well.
All right, bullish brokerage calls coming for UPL. But on that note, we'll take a very short break. Be right back with more of your queries to be answered on the other side.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
All the stock questions then. Let me come to you. This is Achar who's writing from Tamil Nadu. He says he's 51 years old and he wants this question to be answered by Gaurang. Gaurang, he says he's a big fan of you and he's happy to see you on Monday morning. He says he has a Cochin shipyard. He has bought it at a buying price of 1,621. He wants to know when can it reach the 2,400 mark. Cochin shipyard, Gaurang, 2,400 mark is what Achar wants Cochin shipyard to go, but when can we really achieve that?
First of all, thank you so much for those kind words. Investing in the stock market is all about patience and identifying investment opportunity. Stocks don't perform as per your desire and want. Stocks perform on fallback of the numbers, quarter on quarter, half yearly and yearly, and how they, escape the scope of business, taking it forward and increasing it. As far as the investment in Cochin Shipyard is concerned, first of all, let me give a disclosure that we do have a buy recommendation from our research team, and I have always been vocal on ET Now and your sister channel ET Now Swadesh that if investors want to invest in defense related companies, then they should have at least 3 to 5 years kind of time horizon, because the order books that these defense companies have, they take longish time gestation to get executed. It is not like if Cochin Shipyard gets to make a ship an order this morning, in 1 month they'll make, because it takes a lot of time. It's a complex, high technology, high precision order book execution that they do, especially when it comes to the Indian Navy related support that Cochin Shipyard gives. So I can't say when, because it is very difficult, but this company is very, very strong on the fundamental side. And as I said, our research team has a buy recommendation. But as I also said, that have a longish time horizon, 3 years, 5 years. That's when, your investments in defense related companies will start paying you profits in terms of returns. Don't look at 6 months, 1 year kind of time horizon for defense related companies, because it's a complex order book that they need to execute.
That's right. So it's a complex order book that these defense companies need to execute. So for that, you need to have a time horizon of about 3 to 5 years. That's the view coming in. But, contrary to that, we do have a query for the defense pack, for a 1-year time horizon. Manas, let me come to you for this one. This is Venkat Rao writing from Visakhapatnam. He wants to know what are the right levels to enter for BEL and BEML. He has a time period horizon of 12 months.
In BL, I think you should wait for some more time because clearly the charts are weak. On the monthly chart, stock has made a bearish engulfing pattern. So we may see some more correction and BL can come in the range of 360 to 350 levels. So at that level, I think one can create long position for a little bit long term, keep the stop loss below 324, and then you can keep the bigger target of around 425 to 435. In BML, I think even in BML, you can see some more correction because stock is trading very near its 200-day moving average and still stock is showing weakness. So if it breaks 3750, then you may see some more correction. Stock can go down and test 3500. So near 3500 to 3400, you can see some buying interest. So at that point of time, you can create long position for long term. Target would be around 4500, 4800 again. And in that case, stop loss should be around 2800.
That's the view coming in on BEL and BEML. Manas, one more question for you. This is Rajkumar who's writing in from Kochi. He says that he wants to know if these are the right levels to enter Geofinance and HUL for the long term. Are these the right levels to enter Geofinance?
I missed the name. Geofinancial. Okay.
Yes.
Okay, see in Geofinancial, I think even at current levels, one can take a long position for a little bit long term because stock is ready to give a fresh breakout. We have seen a lot of consolidation in the range of 335 to 305. But now look at the pattern. I think in a day or two, it can give a breakout. It can come in the range of 375 to 385. So I think even at current levels, one can buy the stock, keep the stop loss below 314.
All right, so that's the view on Geo Financial Services and HUL as well. Moving on, we have another query from the finance pack. This is Balaji writing from Tamil Nadu. He's bought Manappuram Finance shares, 200 shares at a price of 274. Manas, could you help us understand whether this viewer should continue to accumulate more at these levels or get out of the loss at this point?
See, I think one can hold the stock because we have seen some correction. The stock is trading very near its 100-day moving average, and it has price support also in the range of 230 to 235. So for medium term, I think one can hold the stock, keep the stop loss below 224. However, I think one should not accumulate more at current levels. One should wait for a breakout. If it breaks 265, then you can add more. Keep the stop loss below 245 in that case, and then you can set the bigger target of around 325.
All right, so that's Manappuram Finance on the charts. But let's move on to the next question. This is Venkat Ramana who's writing in from Hyderabad. He says he's bought 15 shares of Britannia at an average buying price of 4,165. Is it worth the long-term wait, or he needs the fundamentals on the stock? Gaurang, coming to you for Britannia. Now, while this entire FMCG pack hasn't really moved, or it has been an underperformer, do you really see the consumption to pick up and therefore Britannia to pick up?
So research team has a buy recommendation, and the underperformance of the entire FMCG pack was because of the top line volume growth not being as per expectation. The demand from metros, tier 1, tier 2 cities being at a lower level, along with that demand from semi-urban and rural India being at lower level. Our understanding is that all this is likely to change. Along with that, as I mentioned, crude oil prices are lower, input cost is lower, consumption demand will start trickling in from October, November, December. Green shoots is what I was talking about at ground level, thanks to whatever was done in the budget by the Honorable Finance Minister. And of course, because of good monsoon, the income of semi-urban rural India is likely to go up, and thereby their capacity to spend is also going to go up. So don't get disheartened by some short to medium term consolidation or underperformance. Give it a little bit more time. I think FMCG sector is likely to perform well on fallback of increase in demand. And of course, that will lead to good volumes and that will translate into a better profitability as far as bottom line is concerned. Hold on to it. We have a buy recommendation on Britannia.
Recommendation on Britannia, but Gaurang sir, your view on capital goods sector is what we could, get if possible. This is Padmanabhan writing from Chennai. He wants to know whether he can accumulate L&T shares at the current level for the long term. So if you could get us this view, and also what's your overall view on the capital goods sector, because L&T has seen a solid Q1, but when we look at ABB India, that has not seen as much growth. It's been an operationally weak quarter for ABB India. In fact, after the con call of ABB India, several capital goods stocks have taken a hit. So what's your view on L&T specifically, and also on the capital goods sector overall?
Well, so we are positive on the entire cap goods engineering space. This is also something that I spoke about defense related companies need a longish time horizon. Similarly, cap goods engineering sector also needs a longish time horizon because of the execution related, issues with respect to complexity and high technology and precision. So we are positive on names like ABB you mentioned. We are positive on names like L&T. In fact, has been on the buy side for a pretty long period of time. We believe companies like Siemens are also positive. A small to mid cap company like KEC International, we are positive. On L&T specifically, to talk about L&T, I think the numbers that they delivered were much better than what most of the analysts had penciled down on the street. The commentary was very, very strong despite of headwinds in the GCC countries, that is the Middle East countries, and order flows not coming in because of the geopolitical tension. They have performed well. On the domestic front, they expect government's spending capacity to go up, and that will add to infrastructure creation, which will lead to an order book increase for cap goods engineering companies. Again, instead of trying to find the right price and right time, start at current levels. If you are inclined towards investing in L&T from a long-term point of view, in part start at current levels and on dips go on adding to it. We have a positive coverage on L&T.
All right, that's the view coming in on L&T, but with that, it's time to slip into a short break. Don't go anywhere. After the break, we'll keep getting your questions answered. Stay tuned.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
Bottom from the level of around 270, and now our stock is trading below 200 moving average. Yes, we have seen some recovery from today, but again, I think the stock has a lot of resistance on the upside in the range of 238 to 242. So if you want to buy the stock, then I think you should wait for a breakout above 242. If you are already long, I think you should keep the strict stop loss below 229, because if it breaks 229, you may see some more correction, and in that case, stock can go down and test 212.
All right, so that's the view coming in on BHEL. Let's move on to the next question. Then this is Carol who's writing in. What's the short-term target for L&T Finance? The buying price for which was 150 rupees. Also wants to know if Birlasoft is a good buy on dips. Manas, let me come to you. Firstly, the targets for L&T Finance. She's bought it at a buying price of 150. And Birlasoft, is it a good buy on dips? I mean, it has really corrected fair bit. But Birlasoft, is that really a good pick from the IT pack?
See, in L&T Finance, I think you should look at little bit long term, because we have seen a breakout on the monthly chart just few months back, and since then the stock is moving sideways. I think this is a consolidation after a fresh breakout. I believe that the stock has potential to come in the range of 240 to 250. But I think think it may take 3 to 6 months time. So I think one can hold L&T Finance and keep the stop loss below 184. In Birlasoft, no, I think at current levels just wait for some more time, because stock has a lot of resistance on the upside in the range of 420 to 450. So if it breaks 450, you can create long position, but at current levels just avoid it.
Okay, so that's the view on Birlasoft. Moving on, Gaurang sir, coming to you. This query is coming again on the hotels pack. This view, Ignatius writing from Kolkata. He has 300 shares of ITC at a price of about 454 rupees. He's been holding them for the past 6 months. He wants to know whether or not he can continue to hold for another 2 years. What would your view be on ITC after that mixed set of numbers that it has delivered over the weekend?
Well, so I hope the question is on ITC, not on ITC hotels, because ITC hotels demerged some time back from ITC. So speaking about the FMCG pack, well, I spoke about HUL, I spoke about Britannia, and similar. I think the numbers were possibly not in line, but a little bit better than what the estimates were. And I think that even after the demerger of hotel business, the kind of diversified business that ITC has, our team has been positive on ITC, and our sense is, and of course, the important thing is that the reliability that ITC had on tobacco and cigarette business has gone down, and larger focus has been there on minus tobacco and cigarette business, and the contribution has been better from the other business verticals. So we do have a buy recommendation ITC from a long-term point of view. I would recommend a hold away.
All right, so that's the view coming in on ITC. But with that, Gaurang and Manas, thank you so much for taking the time out and joining us and answering all the stock-related questions. But it is the beginning of the month, and the beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh Behtar Nivesh Behtar Kal. The objective of this initiative is to promote the habit of consistent investing amongst Indians, helping them secure their financial future. As a part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go ahead and set your reminder to invest consistently and stay committed to your goals for financial well-being of you and your loved ones.
Alright, then moving on, ET Now Leaders of Tomorrow is also back with season 13. Yes, this is India's longest running television show dedicated to MSMEs. And this season, Leaders of Tomorrow is spotlighting the spirit of Indian entrepreneurs through the theme Agility, Ambition, Ascent, and witness how bold visionaries are adapting to change and reaching new heights. Don't miss Leaders of Tomorrow season 13 starting today, Monday to Friday at 7:30 p.m. only on ET Now.
In today's world, businesses navigate invisible systems. Markets shift like shadows. Uncertainty coded into every move. This isn't a glitch, it's the new normal. But a few, they see the code. They know agility isn't a strategy. It's survival. Ambition isn't ego, it's fuel. Ascent isn't linear, it's exponential. They don't wait for certainty. They move through chaos. They become the disruptors. IDFC First Bank presents ET Now Leaders of Tomorrow, Season 13.
Presented by IDFC First Bank. Always you first.
Alright, with that, it's a wrap on this edition of Buy Now, Sell Now. Kanishka and I will take your leave. See you tomorrow at 11 with all your stock-related questions. Don't go anywhere, because Market at Noon takes the market action forward.
पैसा लगाना है तो सेंचुरी प्लाइ क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ।